If you clicked on this video, chances are you've been asking yourself the same question many crypto investors are quietly thinking right now. Is the market slowly freezing into another long crypto winter, or is this just one more painful shakeout before the next major move higher? Prices try to climb, optimism starts to build, and then suddenly everything gets pushed back down again. It's confusing, frustrating, and for many people, honestly exhausting. In this video, we're going to break down what's really happening beneath the surface, why Bitcoin keeps struggling at key levels, whether manipulation is part of the story, and where Pi Network fits into all of this uncertainty. Before we go deeper, make sure you're connected with me outside of YouTube. I share faster updates, breaking Pi Network news, and market insights on my Telegram and Facebook pages, and those links are in the description. A lot happens between videos, and that's where you'll hear about it first. Now let's talk honestly about the market, because pretending everything is fine doesn't help anyone. Bitcoin has been stuck in a pattern that feels almost scripted. Every rally starts with excitement, headlines turn bullish, and social media fills with predictions. Then, right as momentum builds, the price gets pushed back down. This hasn't happened once or twice. It's been happening over and over again for months. When you zoom out and look at the total crypto market, the same thing appears. The market repeatedly fails to break above major psychological levels, especially around the $3 trillion total market cap zone. That kind of repeated rejection doesn't feel accidental. Because of this, more investors are starting to believe that large players are actively controlling price action. Whether it's institutions managing liquidity, whales protecting their positions, or broader macro forces at work, the pressure feels deliberate. When you look at longer time frames, especially charts that most people don't even check, like yearly views, Bitcoin appears to be guided toward finishing the year in the red. For an asset that feeds on momentum, narrative, and belief, that feels uncomfortable and unnatural. This has split the market into two camps. One side believes we are already deep in a crypto winter, even if people are afraid to admit it. The other side believes this is exactly what late-stage consolidation looks like, and that most of the damage may already be done. To understand which side might be closer to the truth, you can't just look at crypto alone anymore. Crypto is no longer isolated. It moves with global liquidity, traditional markets, interest rate decisions, and political uncertainty. Looking ahead toward 2026, many traditional market economists are actually far calmer than crypto Twitter would have you believe. Some expect the stock market to continue growing, even if gains are smaller than what investors became used to in previous years. The expectation is not explosive growth, but stability, with smaller companies potentially outperforming mega-cap stocks. That doesn't describe an environment of collapse. It describes an environment of adjustment. That said, there are real risks on the horizon. Several major events are clustered closely together, including political uncertainty, major legal decisions tied to trade and tariffs, and changes in central bank leadership. Any one of these could introduce serious volatility. If they go badly, risk assets could sell off sharply, and Bitcoin would almost certainly feel that impact. A move lower in that scenario wouldn't be shocking. But if markets manage to absorb those shocks, the broader trend remains constructive rather than catastrophic. This is where the idea of a crypto winter becomes as much psychological as it is technical. Crypto winters often become real because people believe in them. Fear spreads, buyers hesitate, sellers gain control, and sentiment feeds on itself. But when you compare this cycle to past ones, the differences are important. Previous deep crypto winters were triggered by aggressive interest rate hikes, massive liquidity drain, and black swan events like major exchange collapses that shattered trust across the industry. This time, rates are being cut instead of raised, and there hasn't been a catastrophic failure inside the crypto system itself. Pullbacks of 20 or even 30% are normal in crypto markets. We've already seen several of those this cycle. In previous cycles, full-blown crypto winters lasted roughly a year from peak to bottom. This downturn is still relatively young by comparison. On top of that, regulation today is far more supportive and structured, not just in the United States, but globally. That alone reduces the likelihood of another 75% wipeout across the board. From a long-term perspective, the fundamentals that drive Bitcoin haven't disappeared. The supply is still fixed. Adoption continues to grow, even if it doesn't show up in price immediately. Governments have largely shifted from trying to destroy crypto to figuring out how to regulate and integrate it. That removes one of the biggest existential threats Bitcoin faced in its early years. Markets often move ahead of reality, then pull back once expectations are priced in. That kind of retracement doesn't mean the story is over. It means the market is recalibrating. Now let's bring this conversation back to Pi Network, because this is where things start to look very different from the broader market narrative. While much of crypto is stuck in fear, speculation, and price obsession, Pi Network has been quietly focusing on building real-world utility. One of the strongest trends in crypto right now is the shift toward actual usage, and gaming sits right at the center of that shift. Pi Network's collaboration with game developers like Sid Games is more than just another partnership announcement. It places Pi directly into an ecosystem where millions of users already spend time, energy, and money every single day. Players can use Pi to purchase in-game items, earn Pi through gameplay, and transfer value directly between users. This is what real adoption looks like. It's not about holding a token and hoping the chart goes up. It's about using digital currency naturally, without friction. At the same time, Pi Network has been strengthening its technical backbone. Updates to the Node software, now branded as Pi Desktop, address real issues that affected node operators. Problems with mining rewards, session stability, and network communication are being fixed. Improvements to open port verification make participation more reliable and fair. These details matter because decentralization isn't just a slogan. It only works when the infrastructure behind it actually functions. Another critical area Pi Network is addressing is identity verification. As crypto moves closer to mainstream adoption, regulatory compliance is unavoidable. The challenge is doing it without sacrificing user privacy. Pi Network's AI-powered KYC improvements aim to strike that balance by speeding up verification while redacting sensitive information. By cutting review time significantly, users gain access faster, and the network becomes more scalable. This combination of compliance and privacy is exactly what future-ready crypto ecosystems need. When you connect all of this, a clear pattern emerges. While the market debates whether we're entering a long freeze or simply consolidating, Pi Network is positioning itself for the next phase of growth. Gaming brings daily usage. Node upgrades strengthen decentralization. AI-driven KYC prepares the network for global scale and regulation. These aren't random updates. They align closely with the most important trends shaping crypto's future. So are we in a crypto winter? The honest answer is that it depends on perspective. The market is under pressure, and concerns about manipulation aren't imaginary. But the macro environment, regulatory progress, and lack of system-wide collapse suggest this cycle may not repeat the brutal patterns of the past. What feels like stagnation today could simply be preparation for what comes next. The months ahead will be critical. They may determine whether this period is remembered as the start of a long freeze or just another difficult chapter before expansion. If you want to stay ahead of those shifts, make sure to like this video, share your thoughts in the comments, and subscribe for clear, honest updates on crypto and Pi Network. And don't forget to follow my Telegram and Facebook pages through the links in the description so you don't miss what's coming next.